The two Amazon procurement nerds are back. And Dr. Eloise, you know that we took I don't know what we want to call it, a 2 week break from recording. I was in Australia on a family vacay, and you had some crazy, crazy travel. I think your travel schedule is slowing down a bit, which I'm glad to hear.
Me too.
So have you been to Australia before?
I have not. I was actually supposed to go there in the summer of 2020 for a procurement festival, and we all know how that story ended.
So this may be one of the only places in the world that I have been before you. I feel like you're my road warrior traveling friend. So I took notes on my trip, and I shared a lot of my learnings and adventures on LinkedIn as I went, but I thought it might be kind of fun. I'll just pick out a couple things that I learned about Australia that are different than the US. I thought that might be kind of fun for some of our listeners. So there is something called a bin chicken, which is this massive, scary dinosaur looking bird. And when we first landed, so when you go to Australia, it's a 17-hour time difference from California. So we left Friday night at midnight and landed in Australia on Sunday morning. So you basically just kind of lose a day. But we were out walking before our hotel was ready, and I saw these just crazy looking birds everywhere. And so I asked someone about them. So they're called bin chickens. And if you haven't seen them before, I recommend looking them up. They just look very freakish and not like something that I've ever seen in the States before. And trash is not called trash in Australia. It actually is called rubbish, which I think sounds so much nicer and classier than the word trash. And when you look at the trash cans, they actually are labeled rubbish everywhere. Then you and I don't really eat fast food. Given our dietary restrictions, but there everywhere, instead of Burger King, there is something called Hungry Jack's. So I looked it up and I thought, wow, this organization totally ripped off the Burger King name or logo. It's actually the licensed franchisee in Australia. So you'll see Hungry Jack's everywhere, no Burger King at all. Ketchup is called tomato sauce. So if you're at a restaurant and you order fries or you want ketchup with something, you'll get kind of a funny look, and the waitress or waiter will say, "What are you talking about?" It's actually tomato sauce. And then we went to I guess you call it a zoo, where it's really hands-on and you get to pet and hang out with kangaroos. You get to hang out with koalas, which I personally have not seen in person before. And I learned that Australia houses 73 million sheep, which is crazy. And the longest lived koala ever on record is actually named Sarah, spelled the exact same way as my name. So Sarah with an H. So I'll leave it at that. I have lots more random findings that maybe I'll share in future podcasts, but just some really interesting differences between the two countries.
Love that. And by the way, I think we may have to have another episode. There's one of the learnings I've had in my career is that you go when you work with other folks in other countries, which at Kearney I've had the great pleasure of having a lot of colleagues in different, like in the UK and Europe and Asia and the Middle East. The language, the simplest things can be so different, and I think that's worthy of its own episode. Anyway, so we'll flag that one for the future because there's so many things to learn from that.
It's almost like you need a cheat sheet to carry around
So,
the country.
so there is, yeah. So we had this moment in a leadership meeting once where our partner, whose name was Stephen from the UK, was talking, and the Americans were not understanding what he was saying. And then somebody actually found there is this funny meme translator image that goes around that sort of I forget what one of them was. Oh, it says so what the British say, I'll bear it in mind. What the British mean is I've forgotten it already, and what the others understand is uh, they will probably do it. And so we had a lot of fun with that. So I think that there's just so many fun little tidbits when you travel and interact in different cultures.
It makes me think of blackjack newbies. They have cheat sheets you can buy and
Yeah.
bring to learn how to gamble. So I feel like something similar for travel. All right, so I've digressed us enough here, kicking off the episode. So what do we want to talk about today? You had an interesting idea that I think is really fun and worth diving into for our audience.
So when I started tracking this whole procure tech space back in 2017, I used to run around saying there's so much VC venture capital funding into this. This is crazy. This is things are happening, blah blah blah, doing, getting all excited. And what I've noticed over the years, and there's been a fire hose of funding and cash flowing into the procure tech market, which I think is great. However, over the last couple of years, the last 18, 24 months, we've seen a lot of private equity enter the market, the procure tech space. And I think that's a very interesting development. And I thought it would be really interesting to explore this because on one hand, you have the big players like Jagger and Coupa that and I value it that have taken or that have become under private equity ownership, and yet you also have companies, various other startups. And I think so now we've got both venture capital, we have private equity, and we also have institutional investment from actual big enterprises and their investment arms. And I think it's a really marked change. So I thought it would be fun to talk about today.
So, and I think maybe a starting point for our listeners is you and I share some of the differences that we have experienced from our perspectives on what it means when you work for a VC firm versus what it means when you work for a PE firm. I personally have had experience working for a VC firm. I have not worked for a PE-backed firm. I'll throw a caveat yet. Not sure where my career will take me. But knowing we were going to talk about this, I actually spoke to a couple friends who have worked at VC and PE firms. So I want to incorporate some of their feedback and perspective as well, because I found it kind of interesting.
Yeah, I think maybe we could just start with a quick definition, or I'll give you my definition and feel free to add or subtract from it. But when we talk about venture capital, that I look at that and I double check this about 6 times just to make sure, because I'm not a finance person, but I do interact with both private equity and venture capital firms a lot. But venture capital is making investments in early companies, early stage companies, promising ideas, things that have significant growth. And private equity comes in when you have, and this sounds pejorative, but a distressed asset or one that's not performing, and you bring in outside money. And there are pejorative ways to say it because there's a lot of anti-PE rhetoric right now, but essentially private equity comes in to shake things up and turn these distressed assets into profitable companies.
So how I describe each in Sarah Scudder speak, for me, VC is minority stake interest, so less than 50%, typically earlier stage, less established companies, and they're coming in focused on high growth, very, very quick acceleration. For me, PE firms is definitely majority stake, so more than 50%. I would describe those investments as more mature organizations and definitely more established in the market. So that's kind of big picture, I think some of the main differences between both.
That's a really good description, by the way. I like that. We now know who the marketer here is in this podcast.
So a couple things that I want to call out about VCs, again, just because I have experience working for a VC, and then I think it'd be good to get your perspective because you are working in a different light or different capacity with VC firms than me being, an actual in-house employee. One of the things that I've noticed is that VCs want to accelerate innovation because they're more technology focused. I've also found they're not afraid to let companies that they back challenge the status quo a little bit more than maybe a PE firm would do. So maybe that's taking more novel approaches or maybe even making kind of a big pivot within a product or within a category. And I think a benefit of working for a VEC firm is leading with innovation and becoming very obsessed with the customer.
Yeah, I think that matches my experience, and so I'll make a comment, but it's a comment that's meant to be a question back to you. Is because there's a lot fewer constraints. Here's a minority stake, and we're believing in you as the CEO. Go out there and drive that accelerated growth, that disruptive innovation. And so this is the question, maybe not in the form of a question, but that can create not great behavior. And sometimes founders don't have, or even I don't mean to pick on founders because there's a lot of founders I really, really respect, but it can create it can create other problems that are not always apparent from the outside.
So I would say founders are not always the best CEOs.
Right.
And just because you're the idea person doesn't mean you are the person to execute and build and grow a company. So can someone be good at both? Yes. Is it rare? In my experience, yes. So I think one of the challenges with VC is they come in and make this investment and they give the CEO a lot of autonomy. And they say, okay, we have these now really big growth targets. And sometimes the CEOs don't have the skill set and are not equipped to get the company to where they need to be with these new growth targets. And sometimes VC firms are quick to react to support or bring in different leadership to run the organization.
Well, and I would also add that the thing that I've observed is that I agree with everything you just said, and also oftentimes early stage companies struggle to get the rest of the executive team built out that the CEO can lean on and leverage, and it's probably not such an issue in the early stage, but as we see. And we'll talk about this as we move to private equity, but as we see startups move to middle age and start to look for exits and maybe not the desired exit, what you find in that middle-aged tech company is that you're getting, I don't know how to say this more politically correct, but you're getting executive retreads, and folks that are not going to get out there and hustle. And I think that's one of the signals to me that says a startup is starting to run out of gas, is that they're not attracting high quality CROs, CMOs to really drive that trajectory, that growth trajectory.
And I would also argue that the leader that works well in a large organization isn't necessarily the right leader in a small organization.
Right. Yeah.
Not to say that someone can't be good in both environments, but in my world, I have seen numerous times where a smaller company gets VC makes an investment, and then they're looking to hit these growth targets, and they're trying to build out a leadership team, and they bring in somebody with, quote, the right title or the right resume.
Exactly.
And the CMO is used to managing a team of 100 marketers and
Yes,
has no
exactly.
idea how to log into LinkedIn, has no idea how to write an email cadence. And so that I've seen be a challenge, in particular in marketing, where you're bringing in maybe the talent that can't excel in that smaller growth stage.
I have to just take a sidebar and say, if any of you have seen Silicon Valley, the HBO series, and if you haven't, you got to go watch it because they highlight this dynamic so perfectly. Because if you haven't seen it, Pied Piper is the startup that the whole series is built around, and they get acquired. I forget how they get whatever the funding comes in, and they get this executive that has run a big company, and
It's
the
like
dynamic, and then
like deer in headlights.
yeah, yeah. And then the next scene, there's this whole scene where they're around a conference room, and Richard, the founder of the startup, is inundated by all of this sales infrastructure, and there's and they introduce themselves as, I'm so and so, the regional lead for the Northwest, and it's just, they nail it. So the joke is they just nailed it. So funny.
So I have to say, and I mean, I'm based in the Bay Area some of the time. I have not seen the show. I just made a note, and I'm going to add it to my playlist.
Yeah, but I've sent that, just so you know. I sent that clip of that conference clip. Maybe we'll post it in the notes. It is so funny, and they just nailed that whole, just like, zeitgeist moment of that inflection point between startup
Yeah.
being, trying to disrupt and being high growth, and then bringing in a traditional team. And to your point, like a traditional team where you have 100 marketing employees and a couple hundred sales folks, you need that infrastructure, but it's flipping the switch at the right time. And anyway, great series.
Yeah. So another note I made around what I've seen in the VC space is that COVID brought all this awareness to supply chain. I feel like we saw a lot of VCs do first time investments in supply chain tech companies during the pandemic. Challenges, I almost think now there's too much tech. We have all of these solutions that are overlapping, and a lot of them are standalone solutions that these VC-backed organizations. And we're actually, in my viewpoint, seeing companies pivot kind of back and not purchase standalone solutions, but more end to end or more all encompassing. And so I think we're going to see some of these procure tech VC backed companies really struggle now as the market shifts.
Well, yeah, and by the way, just to clarify, that does not mean we are moving back to single suite providers. We are moving in a different, in
Yes,
a next generation. It's just that we have to clarify that.
procurement orchestration type pivot.
Thank you. Yes. Shout out to all our procurement orchestration innovators. No, I think that's right. I mean, I spent a ton of time. Like, there was very few VCs that I talked to pre-pandemic, and it felt like during the 18, 24 months of lockdown, I just met so many people in VCs, and it was exciting. It still is, and that was, to me, that was absolutely an inflection point. And what you just said is exactly what I experienced too,
Yeah.
but
So
from the confines of this very room that I'm sitting in.
so the innovation piece is awesome, the branding, the awareness, but now it's almost like there's too much of it and there's not enough
Yes.
differentiation. So I think that's just a caveat, and we need to throw that out there, that I think we're going to see some of these firms struggle, and I think we're going to start to see more and more consolidation amongst the VCs.
Well, and I think that is a great pivot into the private equity side of this because we have seen exactly what you just said, and that's where we have private equity has entered. And again, I don't want to be dismissive or pejorative, but I mean, some of these assets are distressed or they are just not going to grow, and the VCs grow tired of they want to take their money out and move on, and that's where you see private equity. It's different for every company, so I should note that. But I think what you just said and the realization that a lot of these procure tech companies are, and more broadly supply chain tech, are not going to be the big bang money makers, and it's a reflection that it's time for new leadership, new ownership structures, and a different way of going.
And you mentioned at the beginning, which I was laughing a bit, that there's a lot of hate out there for PE firms. When I was prepping for our discussion, I wound up in a sidetrack on Reddit. And boy, is there hate for PE firms on Reddit. I mean, you should just see the blasting that's taking place with some of these posts.
And by the way, it's also all over YouTube, my YouTube feed. I don't know what I clicked on, but the algorithm is definitely giving me a lot of anti-PE, and it's also actually TikTok too. And I want to note, right? Well, first of all, that I'm again only speaking for myself here, because I don't want to paint any of my employer as one perspective or the other, and also I don't want to delve into is private equity good or bad. It is just an observation of what they do and what they're doing in the procure tech space. There's no doubt. Actually, you see it in the UK too, because Rishi Sunak has the current prime minister has private equity background too. So it's very much been over there in the political climate. It's over here in the political climate. So as a sidebar, we just want to avoid. We're not making a commentary, good or bad, for or against.
Yeah, and again, I've not worked at a PE firm, so what I'm going to share is just talking to some people that I respect in the industry that have experience with both, and some of the fun learnings that I found online with some rants that people have decided to go into.
Yeah.
Let's start with some of the, I don't know, maybe some of the positives of what we've seen with a PE backed organization. Do we have?
Well, I mean, I'm not sure. Maybe I would say it this way: it's too early to tell, and for a lot of these folks, and I think it's actually a reflection to your to your previous point about everybody's running out of gas and we need to change things up. And I think you see this in the source to pay suite provider market, where aside from Oracle and SAP, which is a separate discussion, you see the other competitors struggling and needing intervention from private equity. And so because I went through in prepping for this, I started going around the spider chart and other sort of more popular solutions that I know, and quite a number have private equity funding. So I think it is a reflection that companies can only buy so much of this tech, and at a certain point you have to start rolling these up. And what I found was interesting as I was just prepping for this is that you have the sort of source to pay suite providers and one bucket, and the other is risk, which I thought was interesting because most of the big risk providers are private equity owned now, and I think that's very interesting. And I have a little rant about that, but I'll let you react to my statement there.
I will say that I'm surprised with how many risk solutions there are in the market already, and several more that I know that are in the works that are out fundraising and in development. I'm not sure that I think that there's enough demand for as many risk-focused solutions that they are, and I think we're going to see some major disruption in that part of the market.
No doubt. All right. So, and uh, because I can't help myself, I think but like there's way too many providers, and what risk, and I have no issue with risk tools on their own merit. However, let's not confuse tools with risk management, and that's really what my last book was about. Is build more we have to build more fundamental risk fundamentals into our organizations and ways of working versus just having a tool scanning things. And as a result, I think what has, not because of what I wrote, but I think because all these risk providers are flooding the market, people are baby buying one or two things and calling it a day, which actually makes it more, which creates more risk. But also the market is, there's just not a market there. And if you look at the clients on these risk providers, mostly governments. And because governments can pay the, whether it's the military or whatever state or local or national government, it's becoming subsidized. And that might be an okay business model. I'm not criticizing it, but we have to really understand that I don't think the risk space is profitable. And so I think that's why all these risk providers have had to take private equity. Again, that's a hypothesis on my part. And my prediction is I think we're going to see the same thing in ESG solutions here very quickly, because they are just a generation behind in terms of when they hit the market. But now that I think a lot of them are going to run out of gas.
Well, and to your point around government, I mean, the question is that just a checkbox? Is the solution
Yes.
actually
Oh, of
adding
course.
value? Or
Yeah.
is it we have to buy this, we check the box, boom, we've moved on?
Yeah, that's what it is. It's just compliance, and compliance is fine, but don't confuse compliance with risk management. And if you're going to just do compliance, then you don't need to spend 6, 7 figures on a risk management solution. And that's where the rub is. And I've been vocal about this, but I'll be very clear on this in this format and in this forum. When VCs or private equity ask me, I say, do not invest in risk management tools or in ESG tools, because there is no profitability there. In my view, I have yet to see it.
Yeah, and so then the question becomes, if your hypothesis is correct, are those solutions going to be scooped up by procurement orchestration platforms where they're building, a light touch, more end-to-end type solution?
Or will they just be obliterated by OpenAI? Like that might be a whole other thing, because when you get deep into what these folks are doing, they're doing dashboards and scraping and surveys. And well, at a certain point, it's like, do I really even need a solution for that? Back to the CLM question of, well, do I really need this?
Hmm. So to the point around these kind of standalone, I think one of the, I don't know if I want to say benefits, but something that I've noticed in PE firms is they are more focused on helping connect with a broader ecosystem, where
Mhm.
I see VCs more focused on that complete standalone solution. So that is potentially a difference, and something that could be potentially looked at as a positive with a PE investment.
Yeah, and that's a great point, because uh, the if we take the more positive view, a private equity will have a portfolio of companies, 10, 20, they're tens or maybe even hundreds of portfolio companies that they're managing. And some of them like to say, well, and there is a difference, because some of them just influence their portfolio companies, and some take a very heavy hand, which is sometimes where the criticism comes in. And those that take that guidance, that can actually be very beneficial, because, as you said, the acquired company becomes part of a bigger conglomerate of portfolio companies, and there can be some nice synergies. And interestingly enough, when Thoma Bravo acquired or took Coupa private, one of the first things I noticed or I looked at in their portfolio companies. I believe it was Anaplan. I'll have to look it up, but there were a number of other sort of ancillary or adjacent solutions in their portfolio, which does not guarantee success. But I thought that was actually very interesting that they had other investments. So to your point, this broader ecosystem of portfolio companies might actually help Coupa.
And to that point, I would argue that's very much a partnership play, right?
Yeah.
To build that out. So you also mentioned, PE firms coming in and making pretty major changes. I want to talk about a couple things there that I've seen also. So it seems like PE firms come in and make pretty major leadership changes quickly, whether
Yep.
that's replacing the entire executive team and the entirety, or replacing a large swath of the executive leadership team. Couple other trends that I've noticed is creating what's called a shadow team, where they know they're going to have a group of executives exit. So they're bringing in the next group to kind of shadow and knowledge transfer and share. And then I've also noticed CFOs staying in place longer than other executives to help with the transition.
Yeah, and look at Coupa. We saw exactly what you just said. Rob was kept on for a little bit and then exited, and then the rest of the leadership team gone. Like brand new leadership team across the board, and even in the next levels down. And whether that's good or bad, history will tell us in the future. But yeah, that's exactly what happens.
And then another thing I've seen is PE firms will get involved in the supply chain in that they have a consolidated group of suppliers that they want to use across their portfolio companies. So I actually know of PE firms who have people on staff and their job is to manage supplier relationships and then implement those suppliers across the portfolio company. So limiting the amount of suppliers that are being used and then managing larger contracts and negotiating, better terms as part of the cost reduction play.
And this is again maybe another sidebar, and shout out to the procurement profession, because when a company gets acquired by a private equity firm, the one of the benefits cases is doing exactly what you just said, consolidating suppliers and contracts and getting better pricing and extracting or reducing costs to extract value out of the company. And guess what that is? That's procurement.
Yeah.
And so you see a lot of procurement activities in M&A, or at least private equity, acquisitions, and that's great for us. And so, and you might imagine, first thing you need is visibility into the spend. And second thing you need is to interrogate the contracts, and that's why those that work in private equity get really good at spend visibility and contract analysis and negotiating and supplier relationship management. And a lot of procurement folks have gravitated to the PE space for that very reason, because most of the benefits case is going to be on those cost savings that you can drive, that are not just firing a bunch of people, but it's actually improving the way that the business operates or the way the business spends money. And so whenever we feel down and out, I mean, look at that space, and you see the benefits of doing procurement really, really well.
And I don't see that on the VC side at all. I have
Not
not
at all.
a play. So definitely a plug. Now you could argue that if you are the CPO at an organization that is acquired by a PE firm, you may not be too happy being told what to do from the top down, but there can be tremendous benefit by leveraging and renegotiating much larger contracts.
Yeah, and we've seen, you and I have friends that have gone in on behalf of PE firms and been appointed CPOs. So it would not be surprising for CPOs to exit, and these folks coming in as hired guns to 6 months, a year. And you see that with the other executive positions too.
Some other call out that I want to make, or something that I've noticed, is that um, if you are a procure tech organization going out and selling, I would be very cautious about spending too much time and resources targeting PE firms. And the reason I say that is PE firms are coming in to flip the organization as quickly as possible. They're typically on like a 3 to 5 year trajectory. If they can do it in 2, that's amazing. That's a win. But I feel like the 3 to 5 mark is what they're focused on. They are not going to be going out and making a lot of technology investments when they're focused on flipping the company, unless there's a major, major need and they need to invest in something to help them with that flipping, or that breaking up the company and selling it off. So just think about that when you are looking at your go-to-market strategy and the types of companies that you are selling into.
The only exception is if you can sell to the private equity firm as a sort of like if you have a contract analysis tool and that becomes the de facto tool that they use in these acquisitions, then that's the one area. But you're right. Like selling to the portfolio companies and check the ownership structure before you build a
Totally.
pipeline.
Yeah, I mean, that's so when you are looking at your strategy and thinking about who you're going to target, look at, are you targeting VC versus PE backed firms? Because your strategy would be very different. And oftentimes, these PE firms, they're using Oracle or SAP. That's the
Yeah.
standard. That's what they're using for their financial system. And they're going to tell you, any new acquisition, you are now using this. It's not an option, it's what they use. So to go in and try to sell a standalone solution is very challenging. And if there's even an interest, you've got to be able to have an integration built with one of those large financial systems, or they won't even be considered.
What I would say about private equity, though, is that we have a huge proportion of procure tech companies that are hitting middle age in that first and second generation, starting back in 2017, which sounds crazy that on how fast 7 years has flown. And if you're older than 3 years old as a startup, then you're probably getting to be, well, you are middle aged and you're starting to look at exits. And given the market, very few IPOs are going to happen, and I doubt any procure tech IPOs are going to happen in the foreseeable future. So I would expect private equity to be on the prowl and to be scooping up more of these companies. And because also if you're under 3 years old, you either re-architecting or you're building around this transformational moment of Gen AI. And sometimes it's like I said back in it's like we had box software just at the time cloud software was becoming a thing. And for those of you that remember or don't remember, software used to come in on CDs in big giant heavy boxes and with big manuals. And so if you developed a software that was not cloud native in 2008 to 2010, then all of a sudden there was just this shift to cloud was everything. And so you kind of got left behind, and a lot of software companies got left behind. And I think we're at another moment where if you're older than 3 years old, you have to do a lot of work to become Gen AI core. And I think so I think you're going to start to see more PE acquisitions.
Which is crazy to think that 3 years is like middle aged or old.
I know, and I say that as somebody that is middle aged, but I think we also have to be honest about this, because you made a great point there. There's not enough money to fund all to build revenue and high growth. Forget growth. There's no way that high growth is going to be there.
No, the sales cycles are dramatically longer, and deals are harder and taking a lot longer to close. So the high growth is tough, and I think we're going to see not only more PE investments, but where there's more of a focus of cost cutting and not the same expectations on the growth factor, right? They have a couple ways you can do top line or bottom line. I think we're going to see more bottom line cost cutting.
Yeah, and I know I have a big circle around Coupa because I'm curious to see how this plays out. I have predictions, but I think to your point is what is going to happen. Like Coupa is a great example of this company that, well, they're more than middle age, but they're at this transformative moment, and will they just use the platform as an ATM like SAP did with Ariba until they just grind it into the ground and there's nothing left? Or will they completely reimagine the platform? And only time, I have no idea. I don't have any inside information. So it'll be curious to see which way they go. And it's a good test case for the whole private equity model.
And to our point earlier, I would say, I think the executive team has one person remaining who was there prior to the Thoma Bravo acquisition. So you want to talk about just come in a complete cleaning house and rebuilding of the exec team. And I don't know the exact number, but I would guess upwards of 60-70% turnover company-wide in employees, whether that's replacing or not filling positions.
Yeah, and again, to your point, is it going to be in service to top line growth or bottom line cost cutting? And maybe it's both, but at some point there will become a strategic decision to keep investing to rebuild the platform, which is what Rob and the team did when they were brought in. I can't even remember when they were brought in the mid 2010s, somewhere in there, where they took a P2P platform and built a broader suite.
That's it for today. I think we've exhausted our VC and private equity discussion. Two asks of our listeners. One, we are trying to grow our YouTube audience, which seems to be our most popular channel for our listeners. So if you haven't yet subscribed, click that subscribe button. And then we've also created a form if you have questions about an episode or a topic that you'd like us to discuss. We've been getting just emails and text messages and notes on LinkedIn. So we thought it'd be easier to consolidate all the requests that we have coming in. So you can check out that form, which is linked in the show notes as well. And we will see you next week.